Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM, and today is the 29th of August. Just want to highlight my email address, which is rshaw@fxcm.com, and if you'd like to correspond, just go ahead, send an email through to that address. I'll respond as soon as I'm able to. Just before we get into the webinars, I want to go ahead and bring up the disclaimers. We'll start off with the high risk investment warning first. Good morning, Raj. Pleasure to have you on the webinar as always. Thank you for signing, and thank you for everyone signing in this morning. It is much appreciated. I'll just keep this high risk investment warning on for a few more seconds. Hello, James. Good morning to you. Pleasure to have you on the webinar. Thank you very much for signing in. All right, let's just bring up our commentaries disclaimer. So here's the market commentaries disclaimer. Okay, and just finally, references Market Scope 2.0 and Trading View. I'll just go ahead and bring up Market Scope. I want to take a look at the US dollar. That's where we usually start. See if there's an opportunity here. Before we get into that, let's just run through what we're trying to do with the analysis. So I'm just going to bring up Microsoft Paint. And just want to remind everyone, what we're trying to do is we're trying to find a number of things. The first thing is we're trying to find the primary trend. On the longer term, which way is the trend going? Is it moving up or is it moving down? And we use sort of the longer term time frames to assess that. Once we do that, we get into the sort of the ebb and flow, the zigs and zags, so to speak. And what we're trying to do here is really try and pick out these dips in the uptrend. And if we can successfully do that, we can participate in the next impulse move up if it's an uptrend. And of course, if it's a downtrend, then we would look something like this. And here what we'll be doing is we'll be looking for the, I beg your pardon, let me just get an ellipse here. We'll be looking for the rallies in the downtrend, see if we can take advantage of those. So the whole idea is to find sort of these pullbacks, these corrective actions in longer term trends. With that said, we go through to the US dollar, and we are at a slight disadvantage with the US dollar because we're not really trending. We're not really trending. So if we're not really trending, we've got to try and come up with some sort of directional bias. And well, the best we can do at the moment is take a look at the RSI and see that the RSI is on the positive side of 50. So it does seem that there's an underlying positive momentum. And in fact, what we can also do is we can just look at the peaks and troughs, and we can see that the peak and trough, in my opinion, the references would look like this: trough and peak, and P is higher than sort of our previous peak before. So perhaps some sort of bullish bias coming in. The problem with not having a trend is we're not sure what kind of amplitude we're going to get in terms of how far does this swing actually go. In other words, are we at the apex, or is there still room to go? So we'll just have to take that on the chin and recognize that we are missing some key information here in terms of the peaks and troughs. Nevertheless, we can go down to the daily chart here. And on the daily chart, we use our zones, right, to get that directional bias. And what we're trying to do is we're trying to synchronize the daily up with the weekly. And we can see that we're in zone 1 here, and we're zone 1's the upper blue, upper red. Now, yesterday, I said, just be careful. There's an overbought condition, okay, and that's now normalized. So we did get the pullback just to get rid of this froth on the daily chart. I'm happier with that. The fact of the matter is now we're in zone 1. The RSI is in my opinion, in a more acceptable position with a weekly chart that has an RSI above 50. But then let's go down to the hourly chart. And on the hourly chart here, what we can do now is we can try and use the hourly for some sort of timing purposes. We all know timing is not the easiest thing to do, but using this type of methodology, I'm hoping that it is a little easier. Yeah, what we can see is there's been a pullback to the 50% retracement to S2, so a fairly deep retracement as well. So a pullback to S2, fairly deep. And now we're looking for the crossovers. So we're trying to see a synchronization between the hourly, the daily, the weekly, okay? And what we can see here is that there looks to be a crossover, potentially a crossover. I don't know if this is truly going to cross over. We'll only know after the fact. But what we can say is that the moving averages are converging, and if they converge enough, they'll eventually do a cross, a golden cross or so. We've already got the stochastic that's crossed over. So it looks as if there is a potential dip in the uptrend here. And the idea is, well, if we get that, we dip in the uptrend, we want the momentum on the stochastic to move to the 80 plus area, what we call the upper quintile, because that's really showing the strong underlying momentum. That tends to move the instrument in terms of swings. Okay, a few things just to note here, or one thing in particular to note here, is that we are looking for the crossover, the signal, and then we're acting. In other words, we're going to be slightly late. We're slightly late. We're not pinpointing the bottom, and certainly not pinpointing any tops. And we're just going to have to be okay with that. The truth of the matter is you'll never pinpoint a trend until after the trend is established, even on a longer term basis. Let me just show you what I mean. If I have to take this all out, and we'll start again. So, and I said to you, what kind of a trend is this? Is this an uptrend or a downtrend? You may say, well, it looks like it's moving up. The truth is we don't have enough information. What happens if it just goes like that? And then we have the lower peak followed by the lower trough. In other words, it's actually down. We only know after the fact which way the trend is going. That's just a quirk that we're going to have to accept. A trend is basically 4 points to the upside and to the downside. Here's the downside trend. Let's just put it in. The 4 points would be 1, which would be the peak, 2, which would be the reference trough, 3, which would be the lower peak, and then 4 would be as soon as point 2 is taken out. So I would put 4 over here. So we only really know we've got a trend after point 4. Okay, so even with peak and trough analysis, we just don't know. That's the issue we're having with the weekly chart on the dollar at the moment. We've got 2 points. We don't even have 3 points yet. if we have to take a look at this in terms of an uptrend, it would be something like this. Where the points would be 1, 2, here's the third, and then of course as soon as the 2 gets taken out is where we get the 4th point. So it's only after the 4th point is charted that we know what kind of a trend we have. So in a similar vein, we don't really know if we're going to get the kick up here. So what we do is we defer to signals, and of course everybody may have different signals depending on their trading plan, but the idea here is crossover of the moving averages is what I use, and that needs to be coinciding with a crossover in the stochastic. There's reasons why I'm using moving averages and the stochastic. We're actually getting 2 different measurements here. The moving averages are what we call trend following indicators, so we're getting some sort of signal on a trend following indicator, and the stochastic is a momentum indicator, so we're getting a momentum reading as well. So trying to sort of blend 2 different signals there. So it looks as if we potentially getting the crossover on the dollar. Now, if we're getting a crossover on the dollar, it's quite likely that other instruments are starting to move as well. Let's go down to the euro US dollar, take a look and see if we get any signals there. Sorry, James, I'm just seeing your James just asking what's this indicator here. Yeah, it's an RSI, but let me just show you the settings. The RSI, it's 10, and then the way it's calculated, it's actually calculated on the median, on the average. Okay, not on the close. So just a slightly sort of smoother type of setting. All right, let's just clean this up. All right, so here's the euro US dollar. Again, you can see that we are on the negative side of 50. Okay, we're on the negative side of 50. Let's just go down to the daily. Where are we here? We're in zone 3. Let's clean this up as well. Okay, so we're in zone 3. So we're moving down, right, with the euro US dollar. So potentially some sort of bounce in the downtrend. You can see RSI below 50, zone 1. Let's see if we can get the hourly to sync up. Okay, this looks interesting. This looks very interesting. Okay, we're getting the cross down here, and we're getting the cross down here. And what we would like to see now, to really sort of round it off, would be the stochastic moving into that lower quintile and holding. And if we get into that lower quintile, then there's potentially a swing to the downside on the euro, so the weakness. So take a look here. Let's do a little bit of analysis on the hourly. First of all, this is a 62% retracement. 62% retracement. But I think for me, the more interesting analysis is when we put in our numbers. 1, 2, 2, 3, and now 3. Now we get the next, hopefully 1, 2. Okay, I don't want to get, I think I might be confusing you guys with the numbers here. I'm not looking for trend here. I'm looking for, let's just show you what I'm looking for. So I'm looking for impulse 1, 2, then correction 2, 3. Once correction 2, 3 is over, we get the next impulse down 1, 2. Once that's finished, we get the correction 2, 3. Once that's finished, the next impulse 1, 2. Right? So now 1, 2, 2, 3, and now potentially the next swing. We'll get that swing if we can get that RSI into that lower quintile and hold. Okay, so interesting setup on the euro. So we've had to be quite patient for these setups. I hope there's follow through. Okay, but we don't know if there's going to be any follow through. So of course that's the nature of trading. So you'd use risk management, stop loss management, money management, etc. with all trades. Let me just see if there's any. The weekly is not in uptrend on euro. No, it's not. It's not in uptrend, Gertie. Let me go through that with you again. The stochastic is James just asking. Stochastic is 15.55. Okay. The uptrend's finished. Just like the downtrend on the dollar is finished, the uptrend is finished on the euro, but we are missing. We've only got 2 points. We don't have 4 points. That's the worry. So I'll show you. Trough, peak, higher trough, higher peak. Okay, and then what happens is we break down. So now this is a lower trough. So it breaks the downtrend, but it doesn't start a downtrend. It doesn't start the downtrend, but we've taken out the previous support here. So perhaps we should label it like this: peak, trough, peak, trough. Okay, and see if we can. Okay, that's on a technical basis, Gurdeep. What would be interesting is to look at euro US dollar on a fundamental basis. The way that I think we should do that, if we just bring up our trading view, the idea here is maybe a downtrend starting. Again, I think the best way to approach this, Rose, just in my opinion, is not to predict; it's to react. I think a downtrend is a good possibility. Whether it manifests or not, I don't know. The macroeconomic data coming out of the US is really good. We're getting over 2% GDP growth. We're getting hardly any GDP growth. It's a fraction in the euro area. It's really stagnant. There's retail sales in the US. There's no retail sales in the euro area. The PMIs are very discouraging in the euro area, more encouraging on the US side. So if you take a look at the prospects for monetary policy, Gurdeep, the way we do that is we tend to look at the 2-year notes, the 2 years, and what we can do is look at the spread between the, I'm using the German 2 years as a proxy for the euro, just because of the size of the economy. And what we'll do is we'll minus the US 2-year yield from that. Okay. And the reason that I've done the German first is because the currency we're looking at is euro US dollar. Euro comes before dollar. And what we can do is we can just put euro US dollar underneath this. Okay. And what we get here is an interesting picture, in my opinion. because let's get rid of these moving averages. Because what you actually see here in the spread, the 2-year spread, is actually a top pattern. Look what you get here. You get a left shoulder, you get a head here, and then you get a right shoulder on the spread. So, well, we've got to interpret that. Technically, yes, it's a reversal pattern, but what are we suggesting here, sort of in terms of fundamentals? To me, it's suggesting that the ECB doesn't have the teeth that the Federal Reserve has. The Federal Reserve, to me, seems to be the more effective of the two central banks. Okay, well, that's kind of playing out from this point over here, and I think it's finally caught up with the. I think it's finally caught up with the. I think it's finally caught up with the euro US dollar over here. So it kind of petered out. The euro US dollar kind of petered out, sort of had exhaustion, and then it's starting to fall down. What's the driver behind that? Well, I think the relative monetary policy strength between the ECB and the Federal Reserve. So that's my reading of that. So I think that, and we'll just watch that, of course, but I think that's why we kind of get just the 2 points now instead of the 4 points. Does that make sense to you guys? Does that make sense to you guys? Let's just take a look at the DAX and then we shall end off for the morning, but I just want to get the DAX in. Okay, so this is, let's clean it up. I think the best way to analyze the DAX is, I think this is a tough chart. I really think this is a tough chart. We can put in a peak and trough here, peak there, trough there. I think the best way is to look at it from this support level, just to see if the support level holds. The RSI is really converging back towards 50, and I just wonder if it crosses above 50. So it does look like there's some underlying support here. And if we go to the daily chart, what's interesting on the daily chart, again, I just want to clean this up, I beg your pardon, is that there has been a relative strength forward. We've moved from zone 3 into zone 2. Okay, so we've moved in this direction. Okay, and you can see that the daily RSI starting to show hints of positivity. I would really be much more comfortable if we were making new highs on weekly, but I think for this chart, I wanted to see what happens at the support level here, see if the support level holds. We can actually extend the support level to sort of, so the resistance here turns support. So this is kind of a key level. And what we can do is, well, we can monitor this on the daily chart. You can see we've had crosses there, crosses there. It made it through to the 80, but fell out. Then we got a second chance here, cross, cross, and now it's holding in the 80 area. So it does look as if there's an underlying bullish momentum on DAX. I think if we can get another sort of 2, 3, moving into 1, 2, that would be sort of the way I would look to see if there's an entry or not. All right. Are there any questions? Any questions? Please go ahead and type those in. Any questions? All right, let's wrap up here, guys. No, stochastic's not 533, stochastic's 1555. 1555. 1555. Do you get that, James? Okay, cool. Is there an inverse relationship between the DAX and the euro US dollar? I think that's a very good question. I I'm not sure there is, Raj. In fact, I think the dollar overall is a safe haven. I think with the dollar going up, it might be the reason why there's some sort of resistance here on the weekly chart. But I would say that the dollar tends to have the inverse relationship with DAX. Okay, so that's an interesting question, and I think we need to watch that relationship. All right, let's wrap up here, guys. Thank you very much for joining this morning. As always, it's been a pleasure to have you all, and have a good day and a good evening, and we shall chat tomorrow morning. Thanks very much, guys.